So on Friday, I shared an article which is titled "One in Three Mortgage Borrowers Under Stress, Mortgage Stress." And what I want to do is I just want to have a quick read over the article with you, and then at the end of it, there's 5 points that I want to cover off. So without further ado, I'll start reading. One in three mortgage borrowers in stress. So more than 1 million borrowing households in Australia are struggling with mortgage stress amid the low interest rate environment, according to a study by Digital Finance Analytics. Mortgage stress continues to plague 1 in 3 borrowing households, with more than half of young growing families exposed to it. The study predicts defaults of up to more than 83,400 over the next 12 months. These results are of no surprise, given the ongoing pressure of incomes and rising costs, despite somewhat lower mortgage rates for some borrowers, said Martin North, principal at DFA. North explained that many existing borrowers are unable to access the lower rates banks offer to new customers, leaving them stuck with expensive home loan costs. These households are now reducing their debt. Rather, in some cases, they are turning to additional finance to try and bridge the cash flow gap, or they are raiding savings if they have them and are putting more on credit cards, North said. Households are in mortgage stress if their expenses, including mortgage repayments, exceed their income. This is not defined by a set proportion of income going on the mortgage. They may have assets they could sell, but nevertheless, in cash flow terms, they are underwater, North said. Tasmania has the highest share of households in mortgage stress at 36.9%, equivalent to 31,700 borrowers who are struggling with repayments. In terms of defaults, Western Australia reported the highest rate at 4.2%, above the national average of 2.2%. The share of borrowers in mortgage stress in the state is 33.6%, equivalent to 152,000 households. North said most of the highly stressed areas are in fast-growing, highly developed suburbs in the fringes of many major centres. These areas have many newly built properties on small lots and little infrastructure. As a result, a significant proportion of income goes on transport costs, and so despite many households having above average incomes, I think it's supposed to say their large mortgages and high expenses are putting them under continued severe pressure, he said. North said those in mortgage stress need to be more aware of their financial health. He said households need to map out their cash flows and focus on repaying high interest debts first. North also advised against refinancing or restructuring. While this may provide a short-term path to relief, unless households in difficulty change their behaviour, it will not be a long-term fix, he said. Looking at that article, as I said, there's 5 points that I want to talk about with the article. The first point that I want to cover off is mortgage stress and who's to blame. Now, when it comes to mortgage stress, it could be when you look at the whole borrowing process, there's many people that are involved. You've got the purchaser, you've got the mortgage broker, if you're going for a broker, and then you've got the bank. So those are, the three main parties that are involved. So when it comes to putting the blame, you can't really put the blame, in my opinion, down to any one of those people. Although if there was one person that would bear the brunt of that, and that would have to be the borrower, because at the end of the day, they're the ones that have made the decision to get into the mortgage debt, and ultimately it does come down to them. But then at the same time, I then look at the mortgage broker and then the bank. And then I think to myself, did the mortgage broker do all they can to actually determine whether or not this person is right to borrow? And even in saying that, a mortgage broker can do all they can, but if the purchaser, the person borrowing the money, isn't being honest with, future plans, because when a mortgage broker does talk with clients, it's really important that the mortgage broker understands the plans that they have for the future. They can sort of tailor the best products and give the best advice. But if the purchaser isn't giving that kind of advice to a mortgage broker, then it's just they're going to come unstuck, and the mortgage broker will unfortunately have to, carry some of that blame, even though the borrower was not honest. When it came to the disclosing all the information to the broker. And then there's the bank. So, look, I believe that the banks should be taking not so much of the blame, in my opinion, because they can only really give the money based on the information that's provided to them. And if the broker and the purchaser, the person looking to borrow the money, and I'm not saying it's the broker, but if somewhere along the lines there's the certain information hasn't been disclosed, then obviously the banks can only go off information that they've been passed on to them from the broker and the borrower. So when it comes to blaming, I don't think that you could put it onto one particular person or party, but I guess the main party would be the borrower in my eyes, because they're the ones that ultimately decide that, hey, I want to get into this mortgage debt. So, you're the one that says yes or no if you are the borrower. Second point I want to cover off is questions I have relating to the article. Now, the article, although it was a really good read and some really good information, I probably would want to know a little bit more. I want to know when a lot of these purchasers are getting into mortgage stress, whether they've been purchasing property in the last 2 to 3, even 5 years. It had a few. It had Western Australia and Tasmania there. So the Tasmania one, I guess if I'm just going off the top of my mind, Tasmania recently has gone for a bit of a property boom. So I'm thinking that there's a lot of recent purchases possibly in that that figure that they had for Tasmania. And then there was WA, where you've probably got a lot of people that are still recovering from what happened there with their property boom, with mining sort of going away from there, meaning a lot of people have property there that's worth a lot less, than what they actually borrowed for the property. So I would actually like to know from that article what are some of the figures for, I guess, New South Wales, Sydney, some of these bigger metropolitan areas, to give me a really good idea. So the third point I want to cover off is something that was mentioned in the article, talking about refinancing and how difficult refinancing has become. One of the reasons why I believe that refinancing can be difficult for some borrowers is that when borrowers look to first purchase a property, they're obviously purchasing it at a lower rate, because for a lot of first home buyers, that's where a lot of the attractive rates are. A lot of the lower rates are offered for a lot of the first home buyers because it's a way of trying to get them into the market as quickly as possible, and to make it as easy as possible too for them in their first initial years, 2 to 5 years, depending on what sort of contract you sign and what rate you're able to lock in. The problem that I see a lot of borrowers get into is that it's very easy to make plans in that moment, but when it comes to property and life, I just don't see for some people, they don't sort of like to work together very well. We know it ourselves with what we've been through, and how we've had to try and deal with mortgage debt, and it hasn't exactly been the easiest. And I know that for us, if we were to try and get a refinance, we'd probably be all right now, but when our loan on our property in Blackett did come up for refinance, we didn't really have many options to go to with other banks, because we just didn't fit into the lending criteria because of our situation. And whereas if it was taken from us, all the details from when we first got into the debt, it would have been quite easy to go to another bank. But because our situation had changed, we basically had no choice but to stay with our bank. But in saying that, we still were able to get a pretty good deal in just staying with a bank. So even though it may be difficult to get a refinance with another lending institution, understand that if you've been with your bank for a while, there's going to be I'm not going to say good chance, but there is the possibility that just staying with the bank, although you may not be able to get some of the better rates that they offer, like new borrowers, or some of the deals that other banks offer, if you are in that situation where refinancing may be a bit difficult, then potentially just staying with the bank and just trying to get a better rate or a better deal than what you've already got without having to get a refinance is probably the best option that you can go with, in my opinion. And the fourth point I want to cover off is why you shouldn't be getting a refinance. And one of the reasons why I believe that you shouldn't be getting a refinance is if you're looking to get a refinance because you're looking to save money, because you should already be saving money. And if you need to get a refinance because you're paying too much, or you feel as though the stress of the mortgage is getting on top of you, getting a refinance to try and get lower rates to save a little bit of money, as the article said, and I 100% agree with it, is just going to be a short-term fix, because obviously you've not shown the ability to save in the first place, and if anything, you're probably just going to get a little bit of extra money that you're more than likely, if you haven't saved in the past, you're probably just going to be looking to spend anyway. So one of the reasons why I say you should not be getting a refinance, and you shouldn't be looking into it, you should actually be looking at your own expenses first. It's always easier, I believe, to save more money than it is to try and make more money. So if you can look at ways that you could sort of cut your costs, spend money on things that you need instead of spending money on things you don't need, that's always going to help you out as well. And the fifth point I just want to talk quickly about is what's to do to avoid getting into mortgage stress. And one of the two things that I believe that you should be doing, tip number one to not getting into mortgage stress is to not get a mortgage at all. And that's probably one of the simplest, most easiest ones that you can avoid mortgage stress, is to not get into mortgage debt. I talk about quite a lot, the idea of, not buying a house straight away and just taking your time and just letting life take care of itself first before you do get into mortgage debt. Because as I said earlier, like life and mortgage debt, sometimes they don't like to get along too well together, and they can make life a lot difficult for you. It can make things a lot stressful as well. But look, if you are looking to get a mortgage, so I guess tip number 2 would be, don't over leverage yourself when you are looking to get into debt. One thing I talk about heaps here is the idea of buying something small, getting into small mortgage debt, something that's really easily manageable. And if you're able to do that, then you're actually able to get comfortable with a smaller amount of debt. Whereas I feel as though a lot of people are sort of over leveraging themselves, getting this massive debt and then trying to fit everything into this massive debt. Whereas if you've got a small amount of debt, it's a lot easier to adjust to a smaller amount of debt, because if whatever life tries to throw at you, because you've got such a small debt to work with, it will be a lot easier, as opposed to if you've got like a massive amount of debt. So those would be 2 tips that I would be that I'd say if you do want to avoid mortgage stress. And I guess a third tip would be just spend less than you earn. If you can just stick to that, I do feel as though with savings, it's almost like people are trying to overcomplicate it to make it seem like it's flashier than what it should be. I mean, savings is a very boring process, and one of the reasons why not many people are able to do it effectively is because it is boring. Not many people want to put money away and see it grow steadily. It's just, if people's idea of saving is that they want to save, and then if they don't already have $100,000 at the end of the year, then it's like not even worth it. So, but bit of a silly over exaggeration, but you get what I mean. So, spending less than you earn, like that's just that should be one of your main fundamentals when it comes to saving, and especially applying it to mortgage debt. Anyway, so that's just my quick take on that article. I'd like to know what you think. If you could please leave a comment below to let me know what you think, and I'll catch you on the next video.